Hi fellow traders, I'm making this video to share my trading plan and analysis of USD JPY. Ever since USD JPY became overbought, I was seeking for an opportunity to enter the short position in USD JPY. So after March 5, it became overbought, and then it retraced to the downside. It made two bearish candle here, and it did not continue. Rather, it made bullish candle and it made a new high. But if we look at the relative strength index, it made a lower high. Price made a higher high, oscillator made a lower high, which is a regular bearish divergence. So we have this overbought condition here, and we have regular bearish divergence. This is what all I see on this daily time frame that can support our idea of short position, but I had not taken any short position until today. So I'll explain why I didn't take any short position and how I took my short position today. So let's go to 4-hour time frame and see the factors for 4-hour time frame. If we look at the 4-hour time frame, we need this range to be broken, and this opportunity is not coming anytime soon. This will take a long time. This will take price to further move at least 37-40 pips and then break this some sort of channel. But this channel is not looking very good, because price did not touch these lines many times, only here, and then price barely touched here. So I think the concept of channel or any other concept cannot be developed, is not there on the 4-hour time frame. So let's go to 1-hour time frame. The main reason why I did not take position even after bearish candles and bearish candle patterns and this moving average crossover and RSI crossover is the events. FOMC press conference and FOMC statement on March 17. So that caused a sudden, fall here. You can see, and you can see that again there was a moving average crossover, RSI crossover here. So moving average crossover to the downside took place here, then even on 17th during excuse me, during this FOMC effect. Then market was retracing to the upside, and then it continued to the downside again on the very next day after Bank of Japan monetary policy statement. And that was a reason why I did not make my decision already. I wanted to wait for FOMC, and then I wanted to wait for BOJ as well. After BOJ monetary policy statement, it made a sudden move to the downside, but it retraced to the upside in the very next candle. I usually trade in London session and New York session. So all this movement took place when I was not available to trade. But this FOMC movement took place in my working time. Then I was looking at the London session, and market started going up in the London session. However, it did not break the previous high. To invalidate the effect of FOMC press conference and FOMC statement, and as well as the Bank of Japan statement, market should have gone and should have broken above this previous high, but it did not break above the previous high, and then gradually it started falling, and it has been falling ever since yesterday's London session first candle. I think this is the first candle of yesterday's London session, and that is where I got a confidence that market has finally decided to gradually decline, because all the major events like FOMC, BOJ and everything already took place, and there is no major factor that can further influence it. So here I thought of taking the sell position, especially after market made a low below this previous low. I wanted to confirm that the previous effects are still there, and they are still effective, and if these factors are still effective, market should continue with a bigger magnitude in the same direction. So the previous magnitude of the BOJ and FOMC caused a low here, and that low was 108.619. So I wanted market to go below this low to confirm that the bearish magnitude is enough and we can consider for short position. So it took place right in the very first few hours of London session today, and then retracement is already taking place, and this is the time to take a sell position. So this retrace, but we have to understand how bigger can this retracement to the upside be and where should we enter the position. For this purpose, I'll take you to the half an hour time frame. You can simply look at this Ichimoku cloud. Market can retrace to the upside and can touch the Ichimoku cloud. Both the lines of Ichimoku cloud is coinciding here, are very, very close to this point. So if you are a very safe trader, you can place a sell limit here at 108.958, or you can take a position right now and you can take half position here. For example, if you're planning to enter one standard lot, take 0.5 here and 0.5 once it will touch this Ichimoku cloud. You should know that Ichimoku cloud will work in this condition as a resistance. First line as the first resistance and second line as the second resistance, because price is already below the Ichimoku cloud. So that's all. I have taken my sell position around 108.85. Price right now is around 108.85 already. So you can take position at this time 108.85, and you can place half of the total intended lot at this price. So I'm doing the same thing. I have already taken half. I have split my positions in. I have split my trade in two positions. I have taken one position at 108.85, and I have placed a sell limit with half of the lot at 108.95. So that's all about this video in short. And now before I end the video, let's talk about the SL and TP. So my TP and SL, it's a very simple decision. I do not want market to go above Ichimoku cloud, and even if it goes above the Ichimoku cloud, I want market not to cross above the high of today's London session, and that is 109.123. Otherwise I'll have to exit the position. So I'll place my stop loss. I'll not place my stop loss. I'll look at the candles. I want a 4-hour candle to close above this high to establish a permanent price action, to establish otherwise there can be some kind of like spikes and market can touch your stop loss and can come back, because recently the volatility is very high in this USD JPY, especially since FOMC statement on March 17. So I will rather wait for a 4-hour candle closing. Maybe candle will close few pips above this point, and maybe I'll have to take a slightly bigger loss, but I'll rather wait for 4-hour candle. So my average price for the sell is going to be this area. Here one sell position, another sell position. So from average price, my SL will be 21 pips plus, let's say 4-hour candle will close 10 pips above this high, so maximum 30 pips. From this point where I have one position, the half position of the total trade, from here this is 25 pips plus, let's say 10 pips extra for the closing of 4-hour candle, so 35 pips. So that is what I'm risking on this trade, 35 pips. And my TP is, so TP I'll have dynamic TP. There is one way to decide this TP. This is AB equals CD. I think 61.8% of AB will not be applicable here, because 61.8% I think will fall inside the AB. So let's see, 0.618, yes, yeah, it's almost inside the AB. It's at equal point. It is exactly at the C point. So 61.8% is not applicable. So this will be the target, or target will be 127.2% of this BC retracement. I'm talking about A, B, C, and D to the downside. So now let's so my first target will be this 127.2. So for the current trade from 108.85, 33 pips. This is almost similar to my risk of 35 pips. So that's why even if I'll not get the chance to activate my sell limit, if market will not go up to 108.95, this single position will make profit for me, and my risk and reward are similar, 1:1. So that's all about this trade. but you'll have to you'll have to monitor the market to adjust your TP, because I already said we need dynamic TP. If market will retrace to the upside, then the point C will go to the upside, and then our target can be different. Maybe they can coincide with each other, maybe they can be different. So accordingly we will have to move our TP. I'll prefer to move my TP to AB equals CD if my target of 127.2% will be very tiny. So that's all about this trade. Thank you for watching.